Hi, hello everyone. It's time for us to review a long-term investment plan with such a difficult times. So I received a lot of friends' inquiry and discussion about the long-term investment plan. After reviewing the 30 years of investment through a lot of the major charts, I have the following key notes. One is even people without long-term investment plan, it will force you to have one short-term one because of your imminent worries that facing direct in front of you. And I see a lot of the situation, either you treat it as luck or misfortune, I see is because you're asking for them. Like an elephant with its beautiful ivory, and they got burned, got hunted. So do you know how your service provider seeing you as? So always knowing what's your enemy and what you are, you will win 100 battles 100%. Otherwise, you can think about the consequence. Okay, let's look at some sort of strategy we got. There are many ways to teach, to learn the skill to attaining the same goal. So we highly recommend our morphing methodology. You can see back all the videos that we have published. And we see always have a wonderful plan. You already win the battle by half. 50% of the work is done. The seventh point is, do not allow yourself to run out of patience, and it can really easily ruin your whole long-term plan, no matter how good your long-term plan is. So what remind us should be, when we are on a sprint, we run like a war horse, that during the course of charging, actually we do not think that much. And a lot of the case, like a very good famous story about a monkey entice a cat to get the chestnut out of fire. And who hurt the most? That means who take the most risk to get some benefit. Risk return wise, actually the cat is not get as much as the monkey, while the monkey is just asking. And we should also think about the consequence, or review and reassess the risk that we are taking. And we always see confrontation come up because of that. So that's a good reminder to all of us. Another key thing is, we see a lot of high quality, reliable, and accessible investment support around investors. But you should pick the good one and know what exactly service they are providing. And during portfolio construction, you should have a core theme, short-term, long-term, income-oriented, or really for long-term gradual steady gain. You should have something that is your core theme. and also be faithful. All the faults, the losses, don't forget, and it cannot be covered. Facing the truth, what you make, what you not make. Otherwise, you don't get the right picture. So practically, the ideal situation everyone is dreaming of, you know that, we know that. But everything has a limit. But something like enjoying the beautiful surrounding, have a peaceful, restful holiday, and make yourself the heart at comfort, that's something that is a good blessing for everyone. Longevity, a little bit wealthy. But the key point I want to make is we have to be realistic, and we should be happy with what we got. Greedy usually will turn very bad if we cannot control the risk. I will have 3 videos to explain what we should know and how we get from our past 30 years of investment journey, from what the major asset class have gone through, and it should bear long-term significance for your long-term investment plan. The first video will talk about the performance in the long run of different asset class or the major equity index. And then you see what we can learn from it. I use a very simple case of Mr. McDowd, 52 years old guy. Okay, you will see it later. And video B, we will talk about how to get your retirement ready and some key ratio, financial independence duration, how long you can remain independent, and then subsequently can project your retirement age. And video C will talk more about the retirement and semi-retirement action plan. We will be quite different or seldom you will hear about in the media in the meantime. Okay, let's go to the VDOA. As I said, people should have short-term concerns, especially if they don't have a good long-term plan. And we know not many time an economic active person can have during his economic active life. Is money really can make money? As global financial markets are developing very fast, they serve all kinds of investment and financial needs and wants. Have you ever think about that you already serve well by the available investment service, or you are serving them well instead of serving yourself? Let's see the case of McDowd. His parents actually invest his red pocket money since he was 14 years old. And now he's 52, he got the time to review what has been done to the red pocket money. His parent has invested his $100 worth or $1,000 worth from 14 to 27 from time to time to the major stock market ETF. We make it very simple, standard long-only equity index funds. Very simple rule also, just invest it and let the money run. Is it do nothing is good? So buy and hold, you know what you get after 38 years? You get a return on average point to point of the asset value, it got appreciated 786%, which is not bad. Let's look at the table. So you can see the total initial investment in these years is very, very minor for 52 years old economic person. Only 4,800, regardless of time value, but it got a return of 786%. You see the initial investment amount at 14 is $100 at 17, before 18 he got $1,000 red pocket money, and at 27 $1,400 because he got married after he received the red pocket when he was 27 years old. So what he says, if he can invest his spare cash like the red pocket money, he will feel very happy. And now actually he's quite upset, of course. Again, let's see what makes up this 786%. When you look at like the index have returned in the past 30-something years, we can see the Nasdaq 10,000%, 2,000% for Nikkei. These are all in the local currency terms, but also quite significant in the 30 years time period. From the 200-something% to 10,000%. It is quite an impressive number, judging that you do not need to do anything. And a recent newspaper in Hong Kong reported Hong Kong MPF in 21 years, it only gets 10% returned. IRR, internal rate of return, only 3.6%, which is definitely quite low when compared with all these numbers. So long-term strategy worked so well for the red pocket money in the past 3 decades. So you should wonder why you need all these gimmick investment funds. Okay, so we look at easily, so what has been fanned this fire? We look at all the key interest rate in Japan, US, and in Europe. They have fallen into almost negative interest rate for quite a while, from 6%, 10, 15%, all the way down to 0 and negative. So what we can say is the ultra low interest rate and super excess liquidity in the major financial system fan this rise of asset values. Of course, you will say we don't know whether it will repeat itself. But judging from the norm that reversion to the mean, you can see there are quite a lot of upside for the interest rate in this major economic system. And so 3 to 5% just by deposit is possible. So again, inflation would be a concern. So as I said before, maybe equity and selected good quality real estate would be a good asset choice again. So the lessons we have learned, the first one is buy and hold work very well in ultra low interest rate environment. We have seen it. And all the major equities market deliver reasonable good returns. So simple strategies works well, and you no need to sell even 1 cent. And we can ignore the currency impacts in the long run. It will compensate by the capital gain. And all the common commodities like crude oil, natural gas, gold also going up in the past decades, point to point. So it highlights the importance of having long-term investment saving plan. That is a very important investment habit. And last but not the least lesson is avoid selling your asset during financial crisis. So downside risk monitoring, of course, is important. So next move, we will highly recommend you should enrich your investment and financial literacy. It's not one or two video or two books. It's a lifelong learning journey, no shortcut, but it is a must. Buy on weaknesses on investment target during uncertain time definitely work in the long run. And everyone should have a disciplined investment plan and tailor-made by yourself. Okay, so I have some more charts for you to study. So before watching our video B, you can check on this chart. It's interesting to see all these 30 years journey through these charts.